right, welcome to Market Opening on our collab show between Business Today and India Today TV. Just after 9, we're here to get you ahead of the curve as we kick off trading for the day. Let's take a look at what's hot in the corporate and financial space this morning. Reliance Industries in focus after Donald Trump's sanctions two big Russian oil companies. Reliance is India's largest importer of Russian oil. Crude oil jumps 3% after the US president changes his playbook from tariffs to sanctions in a renewed bid to play peacemaker with Ukraine. These are his first sanctions against Russia in his second term. Asian markets expectedly nervous about Trump's plans. Uncertainties push major indices into the red. Wall Street also ends lower after Tesla results. Netflix plunges 10% after weak earnings. Sell-off in AI-related and tech stocks. Can Indian stock markets play the contrarian act after a possible muted start? Reports of a trade deal with the US being inked soon will be a game changer for investors. FIs have been net buyers for the past 5 trading days straight. Big deals in the defense sector. Bharat Electronics wins a 633 crore rupee order from Cochin Shipyard. Army signs a 131 crore contract with JBM Auto for electric buses, and also a mega 2700 crore rupee order with Bharat Forge and Adani PLR for more than 4 lakh close quarter rifles. Diwali and the festive season add their own sparkle to the Indian economy. Estimates put total sales during the period at 5.4 lakh crore rupees, 27% higher than last year. Most of the businesses directly link higher sales to reduce GST rates. Swadeshi also gets a big push after Prime Minister Modi's call. All right, let's first take you through some breaking news. MCX Gold, let's pull that up for you. We're seeing quite a crash coming in on gold and silver this morning. Just pulling up the rates for you on your screen. Now we are reversing that fall somewhat with MCX Gold opening up 800 rupees and silver opening up near 1.47 lakh rupees. That's up about 1300 rupees now. So remember, we'd seen COMEX Gold slide about $350 from those record highs near $4,100 now. COMEX Silver has now topped off from 10% from a record and trading near $48. But reversing that fall somewhat, let's go across to Sugandha Sachdev, founder of SS Well Street. Sugandha, good morning. What's happening here with the precious metals after a series of successive all-time highs, some amount of volatility in the prices?
Yeah, hi, Abha. We are seeing a streak of profit taking in both the metals after both the metals tested record highs last week. It's basically the dimming demand at higher levels because the U.S. has indicated that they are likely to strike a trade deal with China, and that is reducing the safe haven appeal of gold. Besides, there are expectations of a resolution to U.S. government shutdown. So that is also leading to a reduced safe haven demand for gold and silver. Plus, we are seeing profit booking after the both tested record highs. And we have also some strength resuming in the dollar index. So all of these factors are acting as catalysts to drive prices on the lower incline. We had seen that prices had topped $43.80 per ounce. And for silver, we had seen levels of $54.5. From there on, we have seen a correction of close to 10% in both the metals. Yet we see that there could be some recovery as market is still pricing in a 25 basis point rate cut by the US Fed at the end of this month. So that could again lead to some resumed buying interest at lower levels. In terms of gold, we see strong support emerging at that levels of around $39.50 per ounce to $4,000 per ounce area. And that would mean levels of around 21,000 on a closing basis for gold. As long as this level holds, we expect some recovery, though it's not going to be a V-shaped recovery. We expect some consolidation to persist in gold prices, wherein prices can edge higher towards 1,25,000 to 1,27,000. Post that, we expect a lot of consolidation to continue for a while. We can call it a time-wise and a slight price-wise correction after close to 65% surge that we have seen year-to-date in gold prices. For silver also, we maintain that 1,45,000 mark is likely to act as a very strong floor area for prices. And as long as that holds, we expect some recovery. But then we do not foresee prices inching past 1,67,000 in the near term. We feel that both the metals will face a lot of consolidation at current levels
Okay.
after the significant surge, the parabolic move that we have seen in prices.
All right. Thanks so much for joining us this morning, Sugandha, for that quick look at what's happening on the precious metals. Let's take a look at the global markets as well. Overnight, fairly cautious and a little range-bound trade, a bit of a fall also on the back of some poor earnings coming in on the U.S. markets, so red across the screen there. Asia also seeing the same trend on the back of nervousness around what's happening with U.S.-China. Again, fractured relations really coming to the surface there. So a spot of red pretty much across the green on global markets. In his first Ukraine-related sanctions on Russia in his second term, U.S. President Donald Trump has targeted oil companies, Lukoil and Rosneft, which you know are Russia's largest oil companies. The sanctions are a major policy shift for Trump, who had not put sanctions on Russia over the war and instead relied on trade measures. State-controlled Rosneft, headed by Putin's close ally Igor Sechin, and privately held Lukoil are the two largest Russian oil producers, jointly accounting for nearly half of Russia's total crude exports. The crude oil market reacted immediately with prices jumping around 3%.
Well, I don't know that they will. I think that they'll certainly have an impact. They're massive sanctions. It's sanctions on oil. The two biggest oil companies, among the biggest in the world, but they're Russian. They do a lot of oil. And hopefully it'll push... hopefully he'll become reasonable, and hopefully Zelinsky will be reasonable too. You know, it takes two to tango, as they say, and we're going to find out. They hate each other. These two people hate each other. You know that better than anybody.
Well, always to the point. Now let me welcome in our guest this morning, Gaurav Sharma, Associate VP and Head of Research, Globe Capital. Gaurav, good morning. Just counting down to opening. And Muhurat session was all right, just a spot of green to keep us a little merry. But this morning, what are we anticipating coming off some weak global cues?
Hi, Abba. Morning. Thanks for having me today on your show. So I think, first of all, season's greetings to you and to all the viewers of India Today and Business Today TV. So I think the Diwali cheers, the rockets and the fulguries and the chakris are all around the corner, and what we are witnessing on the last streak today is just the outcome of that. The Diwali celebrations are on the move. We are heading towards a lifetime high, 26,200 on the board as we talk. Implied opening are suggesting a very good, a strong opening to the Indian brokers today. What I would be expecting is overall participation. Banking has of late performed well. Surge in IT and the oil and gas pad alongside with metal is also quite likely. The rising hopes between a US-China deal and a US-India deal is actually the catalyst to the recent rise that we are seeing in equities, and equally important catalyst for the recent drop in the precious metal prices that we have seen in the past one or two trading sessions. And this particular phenomena is likely to continue. 26,277 was the previous high. Let's see whether the index is able to break it today or not. I'll be very much hopeful and optimistic that we see a new high in today's trading session as well. So keeping my fingers crossed for that.
I mean, it looks possible. I don't know what's happened. Everyone went for a holiday, came back, and the markets are on fire this morning. We've got IT looking fantastic, as you also mentioned, Gaurav, and only two stocks on the Nifty 50 are actually in the red this morning. Everything else is moving higher. Look at the IT index. It's up close to 2% right now. Powering it away are, for example, Infosys, Wipro. That's where we're seeing all the action come in this morning. On your screen, HCL Tech, Tech Mahindra, it's IT all the way. What's happening here, Gaurav? Because we had the numbers come out, markets have digested the numbers. What's leading to this reaction today of all days?
I think it's basically the outcome of the fact that we are nearing a deal. India and US are nearing a deal. Piyush Goyal has visited and met a lot of American counterparts, and if that deal happens, IT, pharma, will be the most to gain out of it, because they were the one that impacted the most. So when the positivity comes, the sweetness will be witnessed in these packs. And I fail to recall, when did I last witness the IT index soaring 2%?
Exactly. I'm trying to recall that as well. It's been such a rough year for IT. So clearly, that's really where the action is. Let's pull up some of those oil and gas stocks as well, just to mark them, see any impact on the back of those sanctions that are being imposed on Russian oil and gas majors. A dip when it comes to the oil and gas index, particular stocks. Let's just take a look. Reliance is actually up 0.5%, not showing too much uncertainty right now. Remember, it's likely to be one of those that will be impacted since it also sources from there. BPCL is down about 1% right now this morning, but otherwise oil and gas not seeing too much volatility in early morning trade, probably waiting to see how it plays out. But BPCL, HPCL, the OMCs, that's where we're seeing a hit coming in. Not so much on RIL, but definitely across the OMCs. IOC, BPCL, HPCL, all of those three are very much in the red. We're eyeing, of course, the oil sanctions, and all your importers will get impacted there. All right, let's take a look at what else is moving as well in the markets this morning, and touch upon that spot of red. Nestle, I think, is possibly because of earnings. The market's probably just reacting to that. No major reaction either way, but Nestle showed a decent set of numbers, and we're also seeing a whole host of companies in the consumer space, Gaurav, reacting post the festive sales and the GST impact that they're already claiming. So earnings seem to already be in line in terms of volume growth so far from what we're seeing indications of on some of these consumer names.
I think the GST 2.0 timings was just on the dot when it comes to benefiting the end user. The Diwali time is a time when most of us do a lot of purchases, whether it may be gold purchases, it may be our vehicular purchase, or it may be the white goods, the whatever kind of electronic gadgets we purchase. Generally Navratri, Diwali, these are the time when people go out and do the purchases, and they were benefited out of it. The GST cut was there, and similarly what we are witnessing is somewhat of a benefit coming into the to the FMCG pack as well. The kind of results that Nestle came in, you've rightly pointed out, has actually paved the way and given us hopes that we would probably see a close to a double-digit kind of a growth on a median terms as far as a larger names are concerned. HUL will be posting their numbers today, and what we are expecting, I am personally expecting 8 to 10% rise in their top line figures. And if that comes in, that will be a clear boost and will pave way for the further, the Daburs, the Maricos, the Britannias of the industry, that they would also be in the mood of coming on to similar lines and similar profitabilities.
Absolutely. Now, India's festive spirit, as we're discussing, is translated into record-breaking trade this Diwali. A Swadeshi push and GST rate cuts have powered the biggest ever festive sales, crossing a staggering 5.4 trillion in goods. From gold to groceries, the Indian market has truly lit up this season. Let's go across to my colleague Karishma Sudani for more details on what's behind this unprecedented Diwali boom. Karishma, over to you.
Well, Abha, it's evident, and in fact, I was hearing your chat where you had mentioned that the markets are also, a majority of them are in green, and I think this speaks about the confidence that domestic investors have showed. And the data recently released also spoke about how Diwali sales this year have seen an uptick of close to 25% more than that of last year. To throw some numbers, it's been at 5.4 trillion in comparison to about 4.25 trillion that was last Diwali. In fact, auto sales need no separate introduction on this. About close to 15 to 35% uptick in auto sales have also been reported during the time of Deepavali. Let me take you back to what Finance Minister Nirmala Sitharaman and Commerce Minister Piyush Goyal had shared just a week back during Dhanteras, where they'd interacted with the press, that this year, because of the GST cuts and the an intense need of pushing the Swadeshi movement, there could be a higher consumption by close to 10%.
All right, that sounds really optimistic, especially for the sector and for what we will then see on the earnings front as well. Thanks for joining us, Krishma, and taking us through that. Let me come back to you, Gaurav, on some of the other pockets of the market and specific stocks. I know you mentioned the sectors that you're looking at, but let's get into specific stocks that you got your eye on. And I also just want to mark Infosys before we come to you for that reply, because it is looking incredibly strong. We're above 26,000 on the Nifty. Of course, Gaurav's already eyeing a new high. And Infy is your top mover today. It's up 3%, a really, really strong move coming up on IT across the board. Infy leading the way, but we've got Wipro, HCL Tech, TCS, Tech Mahindra, everything firing away as well. Gaurav?
Infosys is a stock, is a company that drives a large because they are driving a larger chunk of revenue from a company from a country where question marks are there, which are levying some very extravagant kind of figures that were in terms of taxes that were levied on the Indian players. So now, as we edge close towards signing of a deal, they are gaining pace. They are gearing up for a further up move. There is another move that the Infosys promoter will not be participating in the buyback, which would raise hopes that the retail participants would be able to tender more, and they will be accepted. So that is also one news that is coming up on the street and leading to this up move. Now, apart from IT as we speak, which is the show setter for the date, we are pretty much optimistic on some of the auto names. We remain bullish on Mahindra and Mahindra from the four-wheeler pack, and Hero MotoCorp still remains our positive and one among the best pick as far as two-wheeler pack is concerned. From the banking packs, we are very much optimistic and bullish on the larger public sector giants like SBI, Canara Bank, Bank Baroda. The smaller ones are also gearing up. They can also be considered for a short-term trading perspective, but from a long-term, SBI, Canara Bank remain our top picks. HDFC Bank is one stock which is at its lifetime highs, and there is more room to spare now. Going ahead in the next 2 quarters, we expect the HDFC Bank to deliver good numbers and to perform better than what it has performed in the first half of the year. So these are some of the areas, nook and corners, where we are optimistic at. Other than that, Titan remains one of our favorite picks. It has formed part of our Diwali pick as well. We are bullish on the housing finance space also, because a 1% repo rate cut will be come into place, and the transmission delay generally takes about 2 quarters to actually come to the end user. And as we speak that these 2 quarters have gone by. Now what we are expecting is a better and a much more kind of uptake in the real estate pack. Therefore we are bullish on some of the housing finance companies. Aptus again becomes part of our
Sure.
Diwali pick. Other than that, LIC Housing is also one stock we are pretty much bullish at.
So a whole host of picks coming in there from Gaurav. Banks, of course, and a select few names in his basket. Remember, banks are also primed to benefit from the latest consumption play as well. Housing finance names and so forth. So really, it's all about consumption. But I want to switch track for a moment. Big deals in the defense sector. Bharat Electronics winning a 600 crore order from Cochin Shipyard. The Army signing a contract with JBM Auto for electric buses. And also a mega 2,700 crore rupee order with Bharat Forge and Adani PLR for more than 4 lakh close quarter rifles. Defense has also been a sector, Gaurav, that everyone's been eyeing. A lot of action and movement there structurally as well. We're seeing a lot of these stocks moving and primed for really good returns. What's your view, and would you have any picks in that pack? Bharat Forge today is up 4% on the back of that news.
So, Abha, firstly, I want to make a disclosure here. Yes, we do have a view on it. We have coverage on uh, some of the defense names, but I just want to update the viewers that defense is a story which has to be taken into account from a long-term view. It is not a short-term story to set in. One order can have an impact on a stock that can perform for some time, but on a larger front, these kind of contracts from the Indian government will keep on going. India is now one country which is participating globally. We are getting in export orders as well. Therefore, this is one industry which will witness a lot of a new capex expansion, a lot of government interest,
Yeah.
and a lot of the negative part is a lot of documentation work, a lot of approvals are required to actually set a company which is into the defense and arms and ammunition
Right.
business. We remain bullish on two companies. The first is HAL and the second is Mazagon Dock. We are
Okay.
very much bullish on these stocks, but we do have a 1.5 to 2 years kind of a horizon on this. So if some person can, the viewer can invest money for 1.5, 2 years, you can simply consider these stocks from a long-term perspective. But again, I would say from a
Sure.
short-term perspective, it will be a trading bet purely.
Thank you so much, Gaurav, and for joining us today. Great to get your very detailed views on some of these pockets. The two stars this morning, we've got Bharat Forge, of course, that we were just discussing. We've also got Infosys. Remember, also the promoters have opted out of the buyback. That's the other news in Infi. We've seen the entire tech pack rally this morning with Infi's leading the way, and I'll pull it up for you once again. And the other news there to keep an eye on is the fact that, of course, the promoters have opted out of the buyback for tax implications, and Infi is up about 3% right now today. That's definitely one of the big news makers this morning. That's where we leave it on the show, but do tune in for market closing at 3 p.m. Thanks so much for watching.